Nvidia shares are lower ahead of its earnings out Thursday. A report from the information saying its new Blackwell AI chips are overheating in its servers. That's weighing on the stock this morning, down just about 2.5%. So will Nvidia's results live up to the high expectations and turn this current stock move around? Joining us to discuss, we've got Paul Meeks. He's the portfolio manager at Independent Solutions Wealth Management. Paul, it's always great to chat with you here. What are you expecting heading into this earnings print? Is the current pressure on Nvidia's stock something that sets them up better for a pop after those results?
Yeah, I think they're going to have a nice beat, but here's the problem, Madison, and I got this data from the analysis tab on Yahoo Finance. 4 quarters ago, the company beat the street's EPS estimate by 19%. Next quarter is 11% beat. Then it goes down to a 10% beat. And then the last quarter was, quote unquote, only a 6% beat. So a lot is expected of Nvidia, and they're going to have to beat the estimates by even more. Let's get back to a double-digit percentage increase beat. And then I think people will feel more comfortable. In the meantime, today's issue about potential overheating in the Blackwell chip, it's obviously not a positive. We also don't know it to be true. And you may recall a couple weeks or months ago, there were similar kind of manufacturing glitch issues, and that actually brought a good opportunity to buy the shares. Right. And so if this stock backs down to the 50-day moving average price of about 130, I'd probably buy it with both hands. As to the quarter they're going to announce Wednesday evening, I think it's going to be great. But as I said before, it's got to be a bigger beat than they have been beating the last few quarters. I need to see that. In the meantime, I have a third of my portfolio in this stock, and I feel good about that.
Paul, what are you expecting to hear on the demand pipeline front?
Oh, I think the demand's going to be very, very bullish. And that's no surprise, Brad. You think about all of the other companies or customers in this AI GPU supply chain have been raising their CapEx guide, have been very bullish about their own demand. And so I think that is not in question that we will have a very bullish demand picture. And that's why I think, Brad, that if we do have a short-term manufacturing glitch, because nobody else is as close as they are to making these chips, you buy it because the demand is there and they'll fix their problems.
But it's interesting, we've still seen 6 quarters of growth deceleration in the stock, Paul. At what point is there something that stops the momentum for Nvidia? Is it that lack of further growth as a catalyst, or is it something potentially more insidious like a competitor coming in?
I don't think it's really going to be a competitor. I do expect AMD to get its act together and be a viable second source, but it's also interesting that in the last couple of days, AMD announced that they're firing 1,000 people, which is pretty large, 4% of the global workforce. So we do know that that company's problems are more CPU related, but still, I don't think that they're going to close the gap. So it'll be a big market. AMD will have a slice of that pie. Nvidia will continue to have the biggest slice of the pie. And what would happen is, and the greatest tell would be, when you start to get the capital expenditure budgets from the hyperscalers, the guys that are building these big data centers, and they start to rein in their CapEx. In the last couple of quarters, they've been increasing their CapEx. That'll be the tell to look for.
At what point would we be able to tell, and investors out there really be able to discern when Nvidia's shifted from a valuation front-running position to then growing into a valuation? And how does that kind of show up in some of the metrics that we hear on a quarterly basis, at least at this juncture?
Yeah, well, what I tell you, Brad, is I know most people say, okay, the stock tripled last year. It's working on a triple this year, so it must be overvalued. But if you take a look at it, it's trading at 30 some odd times next year's earnings, and that's probably a relevant growth rate for the next couple of years. So it's trading at about peg parity. I actually look for stocks trading at that range as tech values, or at least relative values. So I don't think we have a problem with valuation. I actually think valuation can expand. But again, it's all going to be about, oh my goodness, The hyperscalers have reined in their capital expenditure budgets, and that's going to back into less demand for NVIDIA's GPUs.
Paul Meeks, always a great opportunity to get some time with you. Thanks so much for teeing up what we're all going to be sitting on the edge of our ergonomic chairs waiting for, which is those NVIDIA earnings later on this week. Appreciate it.
Be well, guys.
You too.